Hi, this is Mac with PriceActionTradingSystem.com, and this is Wednesday, June the 13th. This will be our chart lesson for the day. And we just had a big trading range today, and it was real simple to find because if you use the highs from yesterday right in here, you see, and then the lows from yesterday afternoon, actually really yesterday morning, because the first of these lows was made around 10 something, but anyway, if you use that for your lows, there was strong support here, so you should have been expecting a possible bounce there. And your resistance, by the time you came in today, you had a double top right here, so you should have been expecting resistance there. And if you found that most of your trades were shorts, there weren't a lot of entries early on, to be honest with you. Let me back out here and we'll just talk about them real quick. It'll probably be a short chart lesson. This could be our last one for the week. Just a reminder that I'll be leaving town and taking a 2-week vacation, so no chart lessons for the next couple of weeks. I may still do one tomorrow. It's just kind of up in the air at this point. It depends on how the day goes. But if you drew your trend line off the first couple of swings today, even if you even if you had it drawn more like this right here, you still should have found this entry right here. This is a two-legged pullback to the EMA, the trend line, all the reasons above. But that's how I had my line drawn right there. I usually try to touch the first couple of swings or first couple of bars, and that was it right there in my opinion. You can see that's right where the closes were and the touches were. So there was a nice second entry short right here below this bearish bar. Easy trade, not much more than a scalp though, because we hit this support down here and bounced. And if you saw this right here, you actually could have gone long right here. I did not mark it because it was really suspect at the time. There was no real break of the trend line or anything, and there wasn't a lot of room. However, it's coming off this strong support, and it was a failed break lower. You see, you broke lower below that little double bottom right there, pulled back and went lower again, and then reversed. And so it failed twice to go lower. And generally, you can, that'll be good for a scalp if there's enough room. So if you saw that and took it, it wasn't a bad trade. It's just not a great setup. The better setup was here. And this right here is just a two-legged pullback to the EMA. And let me show you, there's one leg down. See this little doji, and then prices went up. And then a second leg down. If you went to a smaller chart, you'd clearly see two legs back there, pull back there, and they're pretty much two measured legs. And so there's an entry right above this doji, but the better entry was right here. But I like to enter. If you got a doji, there's a few times that a doji's all right to enter above. When you're pulling back like this, and it's the second entry long, it was probably okay there, but this was the better entry to wait for this bullish bar. And when you got that going long above, it was fine. And you could see it was a nice move up. Any runners were easily safe and worth, 5 to 6 points right there probably. And then, of course, you got your double top up here now. And you got this little failed break higher. So there's a short here. And I want to show you this because you might have gotten trapped in here, or might have gotten confused, because if you entered below right here, it was too low to enter here. So you had to enter right here if you entered on this trade. And as long as you kept your stop above the signal bar, which is right here, no problems. You were nice and safe. But let me show you something. Once you started to see all this overlap, if I entered right here, what I recommend doing if you entered right here is exiting when prices got stuck here and waiting for another setup. And you did have this trend line right here, but all the same you still had this double top, and you haven't come back to the EMA for quite a while. So if you saw this trade and you took it, as long as you kept your stop right here, everything was okay, and you might have had to ride this out. But what I suggest, because you never know if prices are going to break through here and go higher when you start to get all this overlap. So what I recommend is when this bounced again, when it came back down here, go ahead and take a tick or two and get your profit and get out and wait for another exit, or another entry rather, which came right here when we made a double top right up here. And look what happened right here. Let me show you this. there's a failed second entry long here. There's the first entry, pull back. There's the second entry right above that bar right there, and it failed and made a double top and turned down, and that's a great sign. So if you went short right there, that's a great entry because it's a failed second entry long. It's a double top. We're at this strong resistance here, and we've really got a two-legged move here. I meant to show you this earlier. There's leg one. And then look, there's leg two. You got almost a perfect measured move right there. So you got it two legs up. So you need to be looking for more correction here than just this little. And this is really congestion right in here. So you have to be careful entering here. But when you got a failed second entry long, you got a trap, and you figure if the worst that's going to happen is prices will come down here and break out the low side and then reverse. But they kept on going and started a downtrend. Excuse me. But let me show you this. Then you got a two-legged correction here. There's leg one, then you got your pull back, and then there's leg two right in there, and it's pretty much a measured move. So you got to learn to watch for those. And actually, I bet you if we measure this from here to here and here to here, you can see it's a perfect measured move. So that's just a two-legged correction. So then we're looking for prices to go higher again. And generally, you're probably going to get something similar to this, but you can see that didn't happen today. We had this nice move up right here, but then we created another double top. It just turned out to be a trading range day. And there's an entry right here again because we broke higher and failed and turned down. And look how far away we are. Whenever you start to get some overlap way away from the EMA and prices break further away, they're going to reverse 9 times out of 10, so that's a great place to go short. I love those setups. Those are easy scalps. That's all you would have got out of that was a scalp, and then it pulled back and would have taken out your stop more than likely. But you got another chance to enter right here. Look, we had all this congestion. We fell out this side, and the highs were along here or even maybe here at this time. Then we went higher again and failed, and that's a nice bearish reversal bar right up here where those highs were. So there's you another short, thinking prices are going to at least come to here and maybe come back down to here. And boy, but they just kept going. They came all the way down to here. So this was a great setup. Any runners? I'm not sure if your runners were safe on this one. I was done trading by this time, so I didn't actually enter here, but let me just look. 1875. Now I believe they would have come back and gotten your yeah, they were just enough to scalp out, and then they did come back. So no runners on that one, unfortunately. But there's a breakout pullback short here. You could have possibly entered, but it's not a great setup because there's all these overlapping bars, and you got a little double bottom there, so it's not really a good setup. And by this time, it's getting late in the day, and there was actually another setup right here. You didn't really know the trend line was good yet until here. So this is another little breakout pullback short. But by that time it's 130, and you're really getting a lot of overlap. You've got some strong support kind of trying to form across here. So there's not really any better setups later in the day. You really should have made all your money before you get that late in the day. So hopefully most people understand. If you haven't heard it before in one of our videos, I don't like entering much. 2:30 is my drop dead rule, and I really don't like to enter after 2. I really don't like to enter after 1 o'clock, period. But if I haven't met my target for the day or my trading goal, I may trade up until 1 or 1:30 and maybe up to 2 o'clock, but I never take a trade after 2:30, and I really very rarely ever take one after 1:30, to be honest with you. I just don't like trading that late in the day. Hey, if you make a mistake early in the day over here, you got plenty of time to correct it and make it back. But if you make a mistake this late in the day, you're done. You're just not going to have time more than likely to make it back. So let me back out of here again and let you see this. But really all this is a trading range, and we really kind of got stuck in a trading range right along there. And you can see that, and you can see that breakout pullback short better right there as well. And this was a failed break lower after 2 legs back, so there really was a nice entry here as well. And there's a little trap right down here. Let me show you this. So this is why I always encourage you to put your lines on, because it makes it so much clearer. And this makes this failed break lower here very clear now. And look what I want to show you here. I want to show you this trap, how you had prices broke lower right here first, below that little doji, and a lot of people got short there. But remember what I tell you, anytime you start to get a bunch of overlapping bars that are way away from the EMA like that, and then they go further in that direction in reverse, they're usually going to at least pull back to the EMA. And if there's enough room to scalp out there, you ought to take those trades because they're generally good trades, even if they're counter trend. That's the only problem. That's the main reason I did not mark this trade, because we were working down. We had this trend line that was holding, so it was a little suspect. But if you put your lines on here and you realize that this is a support area, it was kind of resistance that turned in to support, you could have seen that failed break lower in the little trap right there, and that was a nice run back up there. So if you saw that, good job, but I didn't mark it because it's a little difficult to see and it's not a real easy trade. But this is why I'm telling you, see how it looks right there, but then when you put your line on here where your support and resistance are, now look at it, it looks like a whole different setup right there. And you can see that little trading range we were in, and you really could have bought here. Actually, I take that back, because you wouldn't have really recognized this trading range. Of course, you'd have known this was the former little resistance. See, we got this double top across here, and you would have known to expect a possible bounce here, but you may not have realized it was a trading range yet. It wasn't really clear until we broke lower and then went higher. So it would have been really hard to spot it on this move right here. And it would have been real risky too, because that's a pretty strong move down, and you should be thinking, hey, we're probably going to get another leg, just like that's a pretty strong move up, so you're probably going to get another leg, and there it is. And then you had this pretty strong move down right here, and this is probably one leg, so you figure we're going to get another leg, and that's putting it down to here, and then we actually got a third leg, and then we tried to go lower even further than that. So hopefully that makes sense. But draw your lines on there, because I promise you it'll make it so much easier to see, because if you don't have those two lines on there, you can tell we're kind of in a trading range here, but it's kind of hard to know what's going on. It's real confusing. But when you put this line right across here and you find the most touches where it touches the most closes as well, and then it's really obvious that there's resistance right across there. And again, you draw this line across here, and then it's real obvious that you got former resistance is now support across there, and that makes that just that much easier to see that trading range right there. So keep that in mind, and really it could have even been right there, and that looks even better. I didn't see that one earlier, but now that I'm moving my line around, I see it real clearly. You had a low there, and we just bounced again right there. That makes that even a better setup, because after two measured legs down to a strong support area, you know you're going to get a bounce, and then when you throw that little trap in there that I talked about a minute ago, that makes that trade even better. And you could have been thinking about entering again right here, but let me show you. Notice how there's no trap this time, and notice how you start to get a bunch of overlapping bars. You got 1, 2, 3, and then that ended as a doji 4, and then another one 5, and then another one 6. So, and it did try to create a trap right here. It went lower, but notice how it never broke higher, and you definitely didn't have a reversal type bar like right here. So that's the difference between this entry and this entry. You need to see rejection or some kind of trap and then rejection, and right here you had a trap, and look how it rejected prices really fast and closed on its high. That's a good sign, and you don't have that over here. So you got to learn to spot that, and notice how you broke lower here, and then look at this big bullish bar, and look how it shot higher. So you got to see some kind of reversal and a good setup, and you just don't have that right here, and look what happened. Prices went lower. And you know, is it always that easy to spot? No, and that's probably not easy to spot for somebody that's not used to looking at this stuff. So you know, it takes time to learn to spot this stuff, and it's not something that, you know, some people pick this price action up very quickly, while some people take a long time. And if you're struggling with it, you just got to keep looking at your charts and studying them, and eventually the key is to learn to spot them after the fact. And once you can pull up your chart at the end of the day and you can go through it and you can spot all these moves and these trends and these support and resistance, that's great, because that means you're getting it. and the more you study it, then all of a sudden you'll start to notice them in real time, and one day you'll be here and you'll say, hey, I got this trend line, here's the pullback to it, great setup. Or hey, I spot this support area right here, and then look, oh, boom, it bounced right where I was expecting it to, or it turned down right here where I was expecting it. So and then once you start to see it in real time, you'll just continue to get better and better at it the more you watch a chart. And it's like anything, practice makes perfect. And if you think you can just read a manual or a book and then pick up a chart and start doing this, you're wrong. You're going to have to study it, and you're going to have to practice it. And so I encourage you to do that. But if you once you learn to see it after the fact, just keep working on it. In time, you'll start to see it in real time. I can promise you that. And it may take you longer than it took somebody else. It may take you longer than it took me. It took me, once I learned to spot it after the fact, it took me that took me a couple of months. But then after that, it took me about 6 months to be able to start seeing it consistently in real time, where I could make money with nothing on here but my lines. And you see my chart, this is what it looks like. I will tell you that occasionally at the beginning of the day, I will put the current days or the previous days. Actually, I take that back. It's the current day, the previous day's close. Wherever prices closed yesterday is always an important point. And you can see that. We closed right in here, and you can see that turned out to be a very important point. And then I will also have the low of the day, which is right here, and you can see that turned out to be important, and the high of the day, which is right here, and that turned out to be important, which turned out to be the close of yesterday. So those are three important areas that I suggest that you know where they are. There's I forget what it's, let me just look. There's current day, open, high, low. There it is right there. And generally the open of today is going to be the close of yesterday. So prices closed right there yesterday, so they open right there at the same place. Sometimes there's a gap, and so you need to take, but generally if you see a gap, then prices are going to try to fill it pretty quickly. But that current day open, high, low, I encourage you to put that on there at the beginning and maybe put a line there, just so I've gotten to where I can spot it without it, but occasionally I'll put it on there too, just to give me a quick look, and I may drop a line in there where it's at. But you'll notice that prices will react at those same places just about every time. They're important places, so it helps to know where they are. But anyway, I'm going to wrap it up. We're into 17 minutes. Still not sure if we'll have a chart lesson tomorrow or not. If you don't hear from me, I'll see you in a couple of weeks. And if I get a chance, I will do a chart lesson tomorrow to wrap up the week. And this is Matt with PriceActionTradingSystem.com, and we'll see you hopefully tomorrow, but if not, in a couple of weeks. Thanks.